Hi, I'm Janine Firpo, and with this demo, I'm going to be showing you how you can very quickly do a little bit of research on your bond funds to understand what is in them and what makes them tick. The site that I tend to use is Morningstar. It happens to be my go-to site. I like it because I find it really easy to use, but there are many sites like this online, and if this one is not your favorite, you can choose the one that you prefer. The information that I will show you will be similar from site to site. And everything that I'm going to show you right now is freely available on this site. So the first thing we're going to do is we're going to search for a particular bond fund, and the fund we're looking for is CRANX. And we'll just do a search on that. And you can see that that is the CCM Community Impact Bond Institutional. So I'll click on that. And as we're waiting for that to come up, as a reminder, a ticker is simply often for funds, a 5-letter symbol that is a shorthand for the name of the fund and an easy way for you to reference it and find it online. But if you don't know the ticker, then that's not a problem. If you know the name of your fund, which hopefully you will, you can enter that instead in the search space here. And if for some reason that doesn't show up, then do a search on Google, try to find it there, find the ticker, and then come back to Morningstar and try again. All right, so we're going to go ahead and click on this because this is in fact the fund that we're looking for. And you will be taken to this screen. Now, there's a lot that you can learn from this screen, but notice there are actually a number of different tabs here, each of which has different information. We're going to go through them all. But let's start here on the main page. So the first thing we know from this main page and the name institutional is that this is a fund that is probably intended for higher end customers or people who are institutional investors. It is not generally a fund that is available for most retail investors. And the reason that is the case is because if you look down here, the minimum initial investment in this particular fund is $100,000. So these higher minimums and terms like institutional are often correlated. The next thing to notice here is that there are 5 stars after the CRANX, after the ticker. And that's showing that Morningstar, which uses a 5-star rating system, thinks fairly highly of this particular fund. We can also see here under total assets that this particular fund holds $2.9 billion. So it's a relatively large fund. There's a lot of money that's been invested in it. The next 2 really important things to look at are the expense ratio. That is just a fancy name for fee. And what this is telling you is that you are paying 0.46% or a little less than 0.5% is a fee for holding this fund. And that 0.46 is also known as 46 basis points. So when they're talking about the first percent, the first 100, 46 basis points, or you might have a fee that's 55 expense ratio, that would be 55 basis points. The adjusted expense ratio is a little bit more complicated. This is the description of what it is. I don't tend to look at it because I often find that it's similar to the expense ratio, and I personally don't want to know or need to know everything related to how you get an adjusted expense ratio. For me, the expense ratio is good enough, the fee that I'm paying. And we can see that that fee is about average. So some funds may have smaller fees and some funds may have bigger fees, but this fund is about average. We also can see that the people who are responsible for this fund have a 10-year on average of about 11.26 years. The category is intermediate government. So this means that it is investing a lot in government types of securities, and we'll get to that. Sometimes you will find that there's actually credit quality information and effective duration information on this front page, but as you can see here, not always. But there are ways that we will get to that information in some of these other tabs. And then this tells us status open, that you can invest in this fund right now. It is available for investment. The yield is important because this is telling you how much this particular fund is paying in interest on an annualized basis. Now, because this is a bond fund, that is not the only figure that you want to look at in terms of the return on this particular investment in a given year, because the managers of this fund will be buying and selling bonds within the fund over the course of the year, and that buying and selling will have some impact on the total return. But I'll show you how to find total return in a moment. I'm also going to try to show, I will also show you how you can find another fund very similar to this one that may not be the institutional class, it may be a retail class, and would therefore have a much lower minimum investment, but we'll come to that shortly. The fund analysis tab tells you a lot more about this particular fund. However, this is a premium feature on Morningstar, which means if you want to go into the level of depth that it provides here, in other words, their analysts' views and specific ratings and so on, you have to pay. You have to become a premium member of Morningstar, and that's about $200 a year to do if you do it on an annual basis. It gets less expensive if you buy multiple years in advance. But you can find out a lot, as I said earlier, without paying the fee. But that particular tab, if you really want to go deep on it, then you need to pay. The performance tab is where a lot of you and where I am particularly interested, which is how is this fund performing? And there's a lot of information here. First, you'll see a graph like this, which shows you how this fund is performing versus the category and versus the index. So this fund, which is the blue line, outperformed the category, but fell short sometimes more recently in terms of the index. If you continue to scroll down, you will see the total return on this fund in a year-by-year basis for many years. If a fund has only been in existence for a couple of years, a lot of this table will be blank. And then you see this column, which is the year-to-date. How is it doing right now? These figures tell you what the return was on a calendar basis from the beginning of a particular year until the end of a particular year. And so once that figure has been determined, that is static. And you can see that this fund moved quite a bit over the years, which is to be expected as a bond moves with the market. You can also see how this fund did in terms of the category and how it did in terms of the index, whether it is outperforming the index or not. And it has done better in many cases. These are all positive numbers, except for last year, than the category, but it has not always kept up with the index. So what is the index? That's a good question. Here's the index they're using. This is a Barclay US Government Treasury USD index. And so what index is being used is important, but what's also important for me anyway, is comparing one bond fund to another bond fund of a similar type. So while I find this information very helpful, what I tend to do, and I'll show you more about how I do this in the tools in chapter 6, is I will tend to find this information for a particular bond, then I will look up and find the same information for another bond, and so on, and compare them in a spreadsheet to see how they compare to each other. For me, there are so many different indexes and so many different benchmarks that those don't necessarily serve as the best measurement for me in terms of how I compare different bonds. And then if you go down farther, you will see something called trailing returns. And these are really interesting because what a trailing return does is it will actually tell you how that particular fund or stock or whatever it is that you're looking at is performing from today back a year. So this, the total return, shows you what you would have made from the beginning of a calendar year to an end of a calendar year. The trailing return shows you what it looks like back basically 365 days. So these returns are constantly changing. If you look at them one day, they will be different than what you look and see the following day. And a month later, they'll be different again. So if you are comparing two different funds and you're using trailing returns, it's really important to compare them on the same day so that you're really comparing apples to apples. But as you can see, you can look at where these funds are doing in terms of day end, month end, quarter end, and so on. And I really like this particular methodology. If you scroll down some more, you will see how this particular fund rated in terms of stars over a 3, 5, and 10-year period. So a lot of information here. This is basically your performance page. If you move on and you go to the risk page, then you're going to see a little bit of information about the risk related to this particular asset. And you will see here some of the simplest information to assess is that this particular fund is below average in terms of risk related to its category, but it is returning about average. So it's a little less risky, but it's hitting about the average point in terms of return. Another thing that I think is valuable to look at is the maximum drawdown. And this is, in a worst case scenario, a recent worst case scenario, how much of the assets within this fund were lost during a market downturn. And in this particular case, it was 1.3%. So that gives you some sense of what a potential worst case scenario might look like, and it compares it to the category and the index. So this particular fund did a lot better than the category or the index did. Moving on to price, this is an important tab for a key reason. And the key reason here for me is you're looking for load. You'll notice that there's a front load, a redemption load, a deferred load. And what a load is, and you want to see if there's a load, because what a load means is that you are paying a fee or a percentage of your investment, either front going into the fund, a redemption coming out of the fund, or at some other point in the fund, you are actually paying a fee. So my preference is no load funds are my preference. And so I look at that to make sure there's not a load hidden in there that will have a negative impact on my return, because I won't actually be investing as much as I thought if it's front loaded, for example, and I won't be getting as much of a return as I thought if it's back loaded. The portfolio tab is full of great information. It tells you a lot about what is actually in this fund. And so what we're going to go down the left side first. So what we see here is this is fixed income. It is 92% of this fund right now is in fixed income. It's in the bond market most likely. A little bit is in cash. That is very common. You will normally see some of these funds always have a little bit in cash, so that if they see an opportunity to purchase something, they have that capital available to do that. But this is pretty much a bond fund. If you had a more balanced fund that we were looking at, then you might see that there was a split between US equity and fixed income. Further going down this side, you can see what kinds of funds or what types of fixed income is this fund invested in. And you'll note that it is 65, almost 66% is in securitized, which means that it is invested in government agencies that have securitized assets like mortgages. So my bet is if we go farther down and look more into what this particular fund is holding, we'll see things like Fannie Mae and Freddie Mac, which are the government sponsored mortgage companies. There is about 14% in municipal bonds, about the same amount in corporate bonds, and a little tiny bit in government treasuries. Going down further, we're going to just skip over that for a moment. we can see that this here, that this particular fund holds 1,675 different bonds. That's what bond holdings means. It's got 1,675 different bonds in this particular portfolio. And you can see what's held here. Here is Freddie Mac. So we have banks here, we have mortgages, and if we wanted, we could click and we could see even more of what is held. Apple has probably put out a bond, so there's an Apple bond, and et cetera, et cetera, et cetera. This figure shows you how much of the total portfolio is in this particular investment. So less than 2% is being held by Bank of America. You've got a lot of bonds, and the money looks like it's spread pretty thinly across a lot of these bonds. And you can see the market value of that. So this is what that tells you, is how much, what's in it, how many bonds are in it, and so on. Reported turnover says that about 30% of this fund changes over the course of the year. So there is selling and buying and selling and buying to a rate of about 30%. Now, going back up to the right-hand column, I'm going to do another video that shows you what this box is. In this particular fund, we're not seeing anything there, but this is called the Morningstar bond box, and I will explain that to you in a separate video. What you're seeing here is information that tells you, on average, how long do these bonds have until they mature? What is their duration? And what is their credit rating? And so you'll see here that the effective maturity is about 6.5 years, which means that this is an intermediate bond fund. So if you remember back to the beginning, it said intermediate government. So what that means is most of the bonds held here are of an intermediate term, probably something like 5 to 7 years duration, maturity range. And that there's a lot of government or government securitized bonds, which we saw was the case over here. That's what the intermediate government meant. We also can see that it has a credit rating as a bond of AA. The only thing that's better is AAA and AA+. So this is a high graded bond fund. And on average, the interest being paid on these bonds is about 2.5%. On average. When you have 1,625 bonds, they all have different coupons or interest rates that they're paying. Now, when you scroll down more, this information about the credit rating and the information about duration and these other things are broken down even more. So here we see that although the bond fund has a AA rating, 73% of the bonds within this fund are AAA rated, which is the highest credit rating. So this is a very highly rated fund. You have virtually nothing that's at the lower end of the credit rating scale. Okay. And then you can see here, you can look at the effective duration. You can look at breakdowns of credit rating. You can look breakdowns of yield to maturity if you want. There's a lot more detail about what exactly is in this fund if you want to go that deep. I tend not to look at that level. Further down, this is the sustainability information for funds. It is often more valuable when you're looking at stocks, and we'll go into this a lot more in the video on how to understand your stock funds. But what we can see here that's important is that this particular bond fund is considered sustainable by prospectus. So what that means is the prospectus, or the information that the issuer of this fund or the company behind this fund has put out to potential investors, says that part of the purpose of this fund is sustainability. And that's really all the information that we get right here. But we know that this is defined as a sustainable fund. So we've looked at this information before. As you can see, a ton of information about what is in this fund and what these different kinds of bonds are. When you click on the People tab, then you will learn about who are the managers of this fund. And you will see that currently there are 3 managers. You can see who they are. You can see how long they've been part of the fund. And you can see that this is the name, Community Capital Management is the name of the firm that actually has this fund, has offered this fund. And you can see some of the other funds that this company, in earlier, I saw some additional information here that is not here right now. So one of the things that I have found too with these tools is that because this information is changing on a daily basis, what you see doesn't always look exactly like what you saw the day before. But we can learn more about the parent company, the company that offered this fund, by clicking on the Parent tab. And here we can see a little bit more about them, how many assets they have under management, the fund flows, etc., and more about other types of offerings that they have. So this is more information about the company. What I tend to find the most valuable are the first page, the performance page, of course, the risk, the price page, because I'm interested in whether there's a load, and the portfolio page in terms of what's in it. So those are the tabs that I look at the most. The risk page I will look at sometimes, but I'm basing my risk determinations on really the grade of the fund and some of what's in that fund. That's how I personally do it, but everyone has a different way. Now, one of the things that I said earlier was that I was going to show you a way to see if there was a retail version of this fund. And we're going to do that by just typing in the beginning of the name, which is the community, let me see, Community Impact Bond. So that's all I had to do was say Community Impact Bond, and you can see that retail popped up. So let's click on that for a moment and see what we find. And what we find is a fund that is also an intermediate term. It has about the same total assets under management, etc., but it only has a $2,500 minimum investment. You will find that if you looked at the performance and the portfolio and so on, you're basically looking at the same fund as the institutional fund. It just has a lower minimum, but it has a higher expense ratio. So the expense ratio on the first fund that I showed you was 0.41. The expense ratio here is 0.81. And unfortunately, that often happens because it has to do with the dynamics of running a fund and how these fund managers make money. But what often happens is when you invest less in a fund, you tend to be paying a higher expense ratio. And if you can afford to go into the institutional fund, you will pay less in fees. So if you are interested in investing in a fund like this, let's say you were interested in investing in CRANX, which we looked at first, and you were planning on making at least $100,000 investment, you would be better served to buy the institutional version rather than the retail version. But if you cannot afford the institutional version of a certain kind of fund, then you might need to buy the retail version. So this, again, is for informational purposes. We are not recommending the funds that we're showing here. We're just showing them so that you can understand how to navigate through them in Morningstar. But we will show you in other videos how to use these tools to compare different funds, to start becoming more educated, and to be able to help yourself make decisions about which are the best investment choices for you. So that was the end of this particular demo. Hope that you found it valuable, and thank you for watching.